with Introduction to Assurance, F8 paper of ACCA. What are assurance engagements? Under this, we will read reasonable assurance, statutory audits free from material misstatement, true and fair. Then, second assurance, we have limited. Under that, we have an review engagement. All right, so we are going to start with assurance. What do you mean by assurance? Assurance is an opinion which is given by the auditor to the shareholders, stakeholders. So, assurance engagement, an engagement in which practitioner obtains some sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of the confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. This is a kind of an engagement where practitioner means auditor. They collect some appropriate evidence so that they can able to make some conclusion, final decision to increase the confidence of the intended users. Intended users are the shareholders, stakeholders, other than the responsible party. Responsible party are the managers or the directors of the company. Responsible party prepare the subject matter and provide it to the practitioner, and practitioner tests that subject matter by applying some audit techniques and provide the final conclusion to the intended users so that they can able to make some economic decisions for the company, that company is going in a right direction or company is not going in a right direction. So they test the subject matter against a suitable criteria like some techniques, audit techniques, some financial reporting framework. In this way, this assurance engagement is done by the practitioner. So, giving assurance means offering an opinion. You're giving an opinion. Opinion is given by the auditor about some specific information so that the users of that information are able to make confidence decisions, knowing that risk of information being incorrect is reduced. So, if there is any risk in that information, so that users of the company can make some decision. If there is no risk, a risk can be reduced. Risk can be reduced only when practitioner tests that subject matter which is provided by the responsible party. Then they can able to make some confident decisions on the opinion of the auditor, that is the practitioner. Here we have 5 elements of assurance engagement: three-party involvement, appropriate subject matter, suitable criteria, sufficient appropriate evidence, and fifth one is the written assurance report in appropriate form. Three-party involvement: practitioner, reviewer of subject matter who provides insurance, intended users means shareholders, directors of the company. They need the assurance via practitioner. Responsible party: directors or managers of the company. They prepare the subject matter and provide it to the practitioner. Practitioner tests the subject matter against the suitable criteria. You can see on the third one, suitable criteria means financial reporting framework, that can be laws, guidance, anything which relates to the audit techniques, that is going to come under suitable criteria. Subject matter examined by the practitioner. The subject matter, what is subject matter? That is a financial statement. Sufficient appropriate evidence: by testing the subject matter against a suitable criteria, they collect some appropriate evidence uh, and they form a conclusion, opinion. Basis opinion, they provide a written assurance report to the independent to the stakeholder or shareholders of that company, so that they can judge the financial statement give a true or fair view or not. Illustration 1: buying a house means, consider someone who is buying a house. Like let's suppose I'm buying a house, so I need to go under the structural assessment of that house. That house is good to purchase or not good to purchase, means safe or unsafe. It is it is good to live there or it is not good to live there. To reduce this risk, it's normal for the house buyers uh, means I am the house buyers. So to get this risk reduced, I will hire a property surveyor who can be called as a practitioner or auditor. So that property surveyor can perform a structural assessment, means testing do the testing of that house, and then they provide a opinion or written assurance report to the buyer if there would be any structural deficiencies by identifying or doing the visual inspection of that house. Then they provide it to the buyer. So with this information, buyer can make decision whether to buy that house or not to buy that house confidently. All right. And in this example, responsible party is a current house owner, and the evidence would largely be obtained through visual inspection of that property. Then we have some assurance engagement examples, means financial statements needs to be audited, needs to be reviewed. Any report which is reliable, system reliable or not, that can be also done under the assurance engagement. Verification of social and environmental information, means if company is saying that I'm eco-friendly but that company is not eco-friendly, so any greenwashing is there, that needs to be prevent. Review of internal controls. Value for money audit in public sector organization, mean how the resources of the public sector organization being utilized. Principles. General principles the assurance provider must follow when performing such engagement includes: comply with ethical requirements, apply professional skepticism and judgment, perform acceptance and continence procedures to ensure only work of acceptable risk is accepted, agree the terms of engagement, comply with quality control requirement, plan and perform the engagement effectively, obtain sufficient appropriate evidence, consider the effect of subsequent events on the subject matter, form a conclusion expressing either reasonable or limited assurance is appropriate. Evidence should be documented to provide a record of the basis of the assurance report. So this is all the principles of the assurance provider he must follow by performing assurance engagement. Types of assurance engagement: reasonable and limited. Reasonable means high level of confidence, limited means moderate level of confidence. Reasonable assurance means practitioner test the subject matter and gather appropriate evidence so that practitioner can draw a reasonable conclusion. Limited assurance means limited conclusion. uh, Fewer testing, fewer audit procedures, less audit techniques, and in reasonable assurance, substantive procedures, test of controls, thorough procedures can be performed. Reasonable assurance give positively worded opinion. Limited assurance give negatively worded opinion. And reasonable assurance okay, concludes all the subject matter, confirms in all material respects with identified suitable criteria. So whatever the information which is collected by the auditor by performing the audit, so that is right or that is not right, they are able to make the confident decisions and provide under the reasonable assurance. Similarly they do in the limited assurance report, but by doing less testing and fever testing, that is right or that is not right, that is plausible, means believable, but not true. Or true can be true or cannot be true means we were testing, not confidently that information uh, will be provided means lower level of uh, confidence. Example of the reasonable assurance: in our opinion, financial statements give a true or fair view financial position of this company on this ending year date, financial performance, cash flows for year accordance with IFRS. So that means financial statements is giving a true and fair view of this company on this end date in reasonable assurance. But in limited assurance, nothing has come to our attention that causes us to believe financial statement of this company on this year ending date are not prepared in all material respects according with applicable financial reporting framework. So here the confidence inspired by the reasonable assurance report is designed to be greater than the inspired by the limited assurance report. So the confidence which is more gathered in which report? Reasonable assurance report, and the less confidence is gathered in the limited assurance report. There are more regulations, standards governing a reasonable assurance assignment. The processes carried out in a reasonable assurance assignment will be more thorough. Evidence gathered will need to be of higher quality in the reasonable assurance. Higher quality of evidence, uh, thorough procedures performed in the reasonable assurance report, and more regulation, more standards performed in the reasonable assurance assignment. Next, we have an example of the external audit engagement. External audit engagement, again, it's an example of the reasonable assurance engagement. Purpose of an external audit engagement: ISA 200 overall objectives of the independent auditor and the conduct of an audit in accordance with Indian standards on auditing states that the purpose of external audit engagement is to enhance the degree of the confidence of the intended users in financial statements. This is achieved by the auditor expressing an opinion whether the financial statement give a true or fair view or presently fair, fairly in all material respects, are prepared in all material respects in accordance with applicable reporting financial reporting framework. So this is again the same work which is